okay, what will actually be, or like where are you in 10 years time? How does this company look like, and in what way have your company and your product changed the market? I mean, that's of course the interesting part when you read about Uber and Airbnb and these big players. They really changed the market, and I think that's important. So how will you really take a big position moving forward, and not just be a feature or a product, but actually build a company around what you're envisioning. So that's sort of the 10-year vision. And then we're saying that, okay, but with the capital that you're raising now, what is your plan within the next 2 years? Where will you take your product within the next 2 years? And that I think typically we want to see quite a clear, at least ambition about where do you want to get to within the next 2 years to de-risk your path moving forward.
Hey there, welcome back. I'm Afonso, and today's episode is a little different and more oriented for founders and people building products in startups or anyone thinking about starting their own venture at some point. As you may know, this podcast is about helping you build and grow better products, regardless if you work in a startup, scale-up, or large company. Which is why I invited the one and only Cecilie Skjong, investment manager at Skyfall Ventures, to talk about all things related to founding teams, pitching, the state of tech and the startup scene in Norway, common struggles of early stage startups, fundraising, and more. If you work at a startup or are interested in learning more about how to quickly test your ideas and business model, I strongly recommend you check out my conversations with David Bland, the author of the book Testing Business Ideas, episode number 1, How to Nail Your Product Positioning with April Dunford, episode 19, and Understanding Jobs to Be Done with Bob Moesta, the co-creator of the Jobs to Be Done framework, together with Clayton Christensen, episode 9. So that is episode number 1, 19, and 9. I'll leave the links in the show notes. All right, without further ado, I bring you Cecilie Skjong. Cecilia, let's get started. We are live. How are you today?
Very well, thank you. Thanks for being invited to the podcast.
So you are an investor at Skyfall Ventures, Cecilia, which is a VC fund in Norway, for those who don't know, that invests in Nordic tech startups with explosive potential.
Yeah.
So that's your slogan, or at least what you have in the description. Tell me a little bit more about Skyfall Ventures, just in like 30 seconds or 1 minute, just for folks that are listening to know a little bit more about the fund.
Yes, we're Nordic early stage tech investors. We invest in companies almost from the early beginning until they start to sort of scale in a way. We call it pre-seed seed. We've invested in more than 40 companies so far. Examples include companies like eNode in the climate tech space, Strice doing KYC, AML, Nonce in the Web3 space, and now a new one from Stavanger called Starflow as an example. So quite a high investment pace in Skyfall.
Cool. Yeah, I've heard, and I also heard about the latest investment in Jonas having started a company, so Starflow. Yeah. So that's really awesome. All right, so we're going to talk about great founding teams and founders versus, good or mediocre. Let's sort of explore that a little bit, the traits, the characteristics that you see from all of these companies and from all the founders you've been talking with and interacting with. Also common struggles startups go through, and tap into your advice, some of the most common challenges in the Norwegian tech scene that you're seeing right now, and also how to put together an amazing pitch, because I know you've been exposed to hundreds of pitches by now. So also want to tap into that so folks can learn one thing or two about that. And then also areas that founders should focus on more in your view. Sounds good as sort of broad skeleton?
Yes, sounds
great.
Very good.
All right, let's get started then. So let's first talk about founders, because you meet lots of founders right now, and you've probably already have an idea of some of the traits that you're seeking, some of the characteristics that you see those founders that actually thrive in the end and those that actually struggle the most. I know context depends, context matters a lot, but if there are some high-level qualities and traits that you usually hunt for or are mindful of, what are some of those qualities that you think great founders have?
I think first of all, I have to say, just as a starting point, I think I'm really impressed by everyone who dares to become a founder. It's high risk, it's of course also high potential reward, but it's high risk. So always very impressed by the ones who dare to go on that journey. So really respect everyone who dares and that are learning on the way as well. When we invest, we look at a lot of different factors, but what matters the most is the people. Given we're early stage investors, almost at the earliest stage, all you have is the team. The product can change, so what you focus on can change, the market situation can change, but the team and who sort of is founding the company, that's the starting point. That's what we all have at the beginning. When it comes to the founding team, we look for what we tend to call a trio of the hipster, hustler, and hacker. We have the hipster, sort of the creative guy building, a beautiful product. The hustler is the sales guy who can really package the company into something sellable, both towards investors, towards customers, towards new hires. And of course, you have the hacker who's actually able to build the product, who's able to put it together and make the dream come true in a way. So that's the starting point of it. And of course, amongst these individuals, we'll also look for particular sort of characteristics or personality traits. Of course, there are many things we're looking for, but I think a key part of being a founder is having drive. It requires a lot being a founder, and you're hunting a vision that is far ahead in the future, and you need to have the drive to sustain even when there are challenges on the way. So that's critical. Secondly, I think what at least personally I look for a lot is the personality traits, or the sort of people skills in a way, that you're able to build connections with people. Because in the end, the way you get investors on board again, customers and individuals on board, is by sort of getting to know them and build connections with people at the end. And of course, I think also building a company is complex. So of course, having sort of high IQ as well is important. Being knowledgeable and know a lot in a way. It's important as well.
Awesome. So does it matter if the founding team had been a founder before or not?
We look at both. So we both invest in early in entrepreneurs who's first-time founders, and we also invest in more serial entrepreneurs. I think, of course, being a serial entrepreneur, you've done it once before. You've seen some pitfalls. You've seen what works well. You also gotten to learn yourself on the journey. So, of course, being a second or third-time founder is, of course, something we value highly, but it doesn't mean that we shy away from first-time founders either. And sometimes, first-time founders, typically they're a bit younger, and I mentioned drive as an important trait. And, young people, they typically don't have that much to lose, both on a sort of, they don't have that many commitments in life. Perhaps they haven't bought their expensive apartment, and they can travel wherever they want to go. So I think the sort of drive that you see amongst young entrepreneurs is fantastic, and that can be a huge differentiator when building a company. So I'll share a story. We invested in a company called ParaHelp. They were one of the founders. He was in high school when we invested. The other one was just finished with high school, and I met them, and I was just amazed by their drive and their ability to execute. I remember having a meeting with them on a Friday, and on Sunday evening they answered all our questions and had sort of thought through all the different scenarios. And I think that sort of drive and that sort of skill set was key. So even people in high school, we can consider investing in.
That's really, really awesome. So I guess the first-time founders, well, this is an assumption on my side. First-time founders, you probably realize that the type of support you're going to have to provide is a bit different than, for example, a serial entrepreneur who has, built various different startups in the past. Is that correct? Or
it's correct in some way. I would say when we invest, we're very much focused on that the team needs to be the driving force behind the company. So we will not be the ones in the driver's seat. The founding team, we need to believe that this team is able to build the company and sort of get the customers on board and build the products themselves, and we can be the rocket fuel on the way. And that I think is the same regardless if it's first-time founders or second-time founders. I think it's just depending on sort of what elements, where should we provide the rocket fuel? Is that on your go-to-market strategy, or is it more on just the fundraising side? So it all depends a bit on the setting, but we do believe that it's important as an VC investor as well that the team is in the driver's seat. They're the ones who know their company the best and will not sort of be in the way when they build their company. But of course, what we believe in is always sort of being available. So meaning that if founders, they have challenges or questions, they should always be able to come to us. And we want to build that trust that they're able to come to us both when things are going well and also when things are more challenging. And Skyfall, it was created by a group of individuals who've been founders themselves, and I think coming from the founder side themselves, it's really much in our DNA that we understand that the founding or building a company is both up and down. It's there are challenges as well as you go. So I think
Absolutely.
being open for people to come both when things are going well and when things are more challenging is important.
Yeah, absolutely. And you mentioned these challenges that everybody knows will emerge. It's a given. What are some of the most common challenges that you've seen, or at least the patterns, sort of the clusters of challenges that you've been basically seeing in your journey so far in VC?
Yeah, I think there are a few sort of different type of challenges. I think, of course, there are some things to be aware of even before you sort of start building the company. I think when building a company, you embark on a potentially 10, 15 year long journey. You have to be really sort of prepared for what's to come and really feel passionate about the topic you will work with. If you're spending all your time on this area, it needs to be an area that you really find interesting and one you want to spend all your time working on. And that comes more on the topic side. I think also when it comes to people you're building the company with, you need to be aware of these are the people I will see more than my loved ones potentially. So really be cautious about who do you want to build this company with, and are you aligned on what you want to build and how you want to build it together. So that's sort of even almost before you start building the company even. And then I think as you start building, I think it's always easy. I think also just me as a person working in VC, I think it's always so easy to lose focus. We're always striving in Skyfall as well to maintain our focus. What's our core things to be done this week, next month? But I tend to see myself drifting away. Like I get this idea here and there. And I think that's in general for people that it's easy to lose focus, either on the small things or the bigger things. And I think especially when building a company and trying to sell your product to customers, it's much easier when you're focused on what is the core of what you're building and who's your core customers, and really nailing that before trying to go too broad. Because the moment you start going broader, it both requires more focus on different things and as well typically more people to make that vision a reality. So be sure you focus on the right things at the right time, which is easier said than done. I do personally think as well.
Yeah. All right. So you mentioned two interesting challenges. One is even before you start, like the co-founding team, basically, like who should you partner with to found this company, this venture. So that's one challenge. And then the other challenge you mentioned is basically the lack of focus that we all experience. But at this early stage startup phase, it can actually kill you, because if you focus on the wrong thing or if you're all over the place, you won't be able to make significant, meaningful progress that you actually need. All right, that's cool. Another one I want to add on this. So one thing I see a lot, and I want to discuss this with you when it comes to challenges, is a lot of founders struggle with what I think are typical product management problems, basically. It's finding product market fit. It's basically testing new ideas, finding a value proposition that people love and they're willing to pay for, finding or discovering a new business model, and so on and so forth. So these are really typical sort of quote unquote product management problems that early stage founders really struggle with. Do you see that too? Like this journey on basically this challenge of really finding something that the market actually needs?
Yeah, I think that's for sure challenging, and I think it's something that requires time and patience in a way. I think, but of course, patience to a certain degree. At some point, you might be also, you need to be honest with yourself and say, this perhaps isn't the right thing to focus on. Let's pivot to this instead. I think that's also something to be cautious about. But I think, of course, it's challenging. And I think, people ask, when do we have product market fit? And I think, as many people say, you have it when you feel it, when you feel there is a pull in the market. And it's quite interesting as well when we look at early stage companies. There is one company we have been looking at, and it's like you see this pull in the market for their product. They haven't even marketed the product, but it's a pull in the market from individuals across many different countries to try out the solution. And I think then there is a sign that the market really wants this. But it's a challenge getting there. And of course, we typically tend to like companies where there is what they call product founder fit, where the sort of founder knows the area well, because typically they have experienced the challenge themselves. Like if you've been working in construction for 20 years and you've seen this challenge for your whole career, that might, be a sign that this is worth following, and that your customers potentially also have the same challenges. So that's something we would typically look for. But of course, on the other end as well, sometimes fresh eyes are the best ones seeing challenges in existing industries. So we also need to be open for individuals that haven't necessarily worked in industry before, but are fantastic people in spotting challenges.
Yeah.
But it's quite a cool story in Eno, this climate tech company we invested in. They're doing APIs for power apps. So different power utilities, they can build applications using their APIs to connect all the different hardware devices in houses. And there, the technical founder, he wanted to make this for himself, and he asked on Twitter at that point in time, like, I want to create this application for charging my car, optimizing my car charging. Do you know of any APIs, or do I need to go to the future? And he actually then created the future he was looking for himself. And I think this is like a great example of you really feel that there is a challenge for yourself. And you tried him to build this. And as he built it, he saw that there were other actors wanting to use this API. And then afterwards, he founded the company together with two co-founders. So there's something about feeling that pull in the market, that this is something that the customers want. And also, us being early stage investors, we invest, at very early stages. We can even invest before there is any commercial traction. But what we are eager to understand, are there any signs of this pull in the market?
Yeah.
Is there any signs? Can that be like you have gained these many followers on LinkedIn because you posted interesting things about your vision, or do you have 100 free trial users? So seeing that sort of pull and interest in the market is something we're looking for when we invest as well.
Absolutely, really good. And Mark Andreessen, he wrote this really sort of important article many years ago. The only thing that matters, it was called, which is basically like, out of all these things, like the team, the product, the market, the only thing that matters, according to him, is the market. Well, at some point in the beginning, because you can have a really great founding team if there's no market for what you're doing, basically the wave, then you're missing it basically. And so I really like the pool aspect that you mentioned there. You gotta have these signs. Yeah, go ahead.
No, and I think it's also, as you say, with the market as well. I think it's easier also to build something when there is a market pull for it. We call it the wave. Like if there's a wave coming, it's easier in some way to build it, and that's the reason why all of these AI companies are getting funded, because there's a huge market opportunity where individuals and companies want to start using AI for their workflows. So of course there is a pull in the market to try out new solutions.
Yeah, I think that the challenge there for me is what is like sugar rush in a way type of wave versus long term, because we've all heard of waves before that turned out to be just hype, right?
Oh, yeah.
So it's about really understanding what type of wave is this, and because that will change the kind of investment that you're making basically. How do you go about reflecting about those things, or at least how do you go about basically balancing those types of waves in a way?
Yeah, it's a very good question. Ideally, being a VC investor, you want to catch the wave even before the wave sort of has started to take off. Because like investing in generative AI back in 2019, that was it was a good timing. That's sort of ideal timing. We do discuss sort of these things a lot internally. Sort of what is the wave? What within the wave do we think is interesting? And that's always a discussion on a case by case basis. What we do tend to look at is sort of what's the primary effects of the wave, and what's the secondary and tertiary effects. So what will happen if you succeed with this? Will there be a bigger market opportunity down the line? And of course, how will your product be affected by other actors coming in? And I tend to say to founders like, you can believe you're the only one working on this, because you try to search the whole market for other actors doing exactly the same thing as you, and that you can't find it. But you can every time you can almost think that there is at least like 10, 15 other founders trying to solve for the same challenge at this exact moment. And then it's all about sort of being the fastest ones and trying to solve it in a better way than others, in a way.
Absolutely. And I love that the point you just made on understanding the interdependencies between waves and between players, especially now with AI. There's so many literally layers that people are building on, basically, NVIDIA, and then you have OpenAI, and then you have players that are using GPT to power their own products. So there's basically a sequence and a very important layer to understand, with interdependencies, with geopolitical potential challenges. Like it's a mess basically.
Exactly. Exactly. It really is. I think one way to look at the waves is that I think you typically see waves as reaction to something. So typically you can either see waves being a reaction to regulatory changes. And that's an example with Stripe doing KYC AML. There are huge sort of waves coming in that regulates banks and how to sort of evaluate your customers. There are market waves that are based on sort of how the consumers typically behave. And then you of course have technologically, or how do you say this in English?
Yeah, technological way, or
yeah, exactly, where there is something changing on technology side. And I think here AI is a good example of it, where there is a very big change. But I think within that wave as well, AI has been around for many years. So when we pitch like big data type of use cases or products, that's not something new today. I think there's more compute, not necessarily sort of it's generative AI that has come the last few years, and that has changed the market, and not necessarily AI, because that's been around for many years.
Yeah, absolutely. So then, all right. So then we explored a few challenges and the waves, and how you identify some waves, and being cautious and aware of the different layers of different waves, and how might by understanding that, how might you predict some follow-up waves. Can you walk us through a little bit more about the investment approach of Skyfall? Because we're talking about waves, because I know that that's one thing you look for, and you also look at the surfer, which is the founding team. What else? I think it was another thing.
Yeah, we look for, it's a surfer analogy. So we look for of course, the wave. We look for the surfer, the team, and we look for the board, which is the product. So what product are you building to solve for this wave? So that's the third element that we're looking for.
Gotcha. So then let's dig into that, because Scandinavian product podcast, we had to we had to visit that one, the surfer board. Cool. I really like the analogy, by the way. So product. This is a little interesting, because as you know, like early stage startups, the product is gonna change. Either a massive pivot like we've seen before, or a slight pivot, or just multiple iterations until you actually get something concrete towards the vision you want to, the world you want to create, basically. But as an early stage investor, what are you looking for when it comes to the product? Do you expect to see, you mentioned early signs of pull in the market with this specific value proposition and this specific business model? Do you expect, in addition to that, to see sort of a roadmap in place with not just a vision, but actually some idea of how this little product we have now will evolve? What's your sort of expectations when people come to you to pitch their potential venture?
Yeah, there are many sort of answers to this. I think one angle to take on is that when we invest early stage, and we invest with high risk, and also need sort of we look for companies that can explode. And with that we mean they can sort of go 50x, so meaning they can grow into becoming really, really big companies. And that means we need to be able to see a clear product vision, sort of what will your product be like in 10 years time. And perhaps if people that are pitching to us will hear this, they will know that what we're typically asking for is like, okay, what will actually be, or like, where are you in 10 years time? How does this company look like, and in what way have your company and your product changed the market? I mean, that's of course the interesting part when you read about Uber and Airbnb and these big players. They really changed the market, and I think that's important. So how will you really take a big position moving forward, and not just be a feature or a product, actually build a company around what you're envisioning. So that's sort of the 10-year vision. And then we're saying that, okay, but with the capital that you're raising now, what is your plan within the next 2 years? Where will you take your product within the next 2 years? And that I think typically we want to see quite a clear, at least, ambition about where do you want to get to within the next 2 years to de-risk your path moving forward. And that doesn't mean we necessarily need to see a detailed product roadmap, and I think that's not necessarily the way to go either, because things will change as you try to get to know your customer better. But at least a plan in terms of where you want to explore, where you want to head, etc., is valuable. But we will never we will never go after the team and say, okay, when you pitched us, you promised to create this or get to this number. We'll never sort of be there and check for all those elements. But it's more about understanding their thoughts. And that also brings me back to sort of also how we invest, all these elements about how they think about their long-term vision, how they think about the next 2 years. It says a lot about the team as well. So it all sort of trickles back into how the team thinks, how they're driven, how they execute. So almost like, and we tend to say we don't invest in products, but we invest in teams. So, so it all comes back into the team discussion in a way.
Yeah, cool. This is, I was expecting this answer, but it was nice to hear it, because because in product as you said, things will change, and in more established organizations, which I think should operate more like a VC, sometimes the expectations are very different. Sometimes the expectations is like, give me the roadmap for 24 months, with all the little things that it's this illusion of control that people want to see. And of course, we all know that things change along the way, and they should change, and companies should remain agile with new information, basically testing new ideas, as many as possible, and then basically have the evidence to define the path, basically. So you mentioned back to the team, because you mentioned a big focus of yours is the team. there's someone who has to tell this story really well. You know, that has to be perhaps well articulated, you know, almost charismatic, who knows, at least able to tell a really clear story of, hey, this is our vision and this is how we think we're going to make this vision a reality. And this is our pitch. This is where we are. These are the main assumptions, the riskiest assumptions we're making, blah, blah, blah. So let's talk about pitching. I have seen great pitches and I've seen a lot of terrible pitches. And I you know, I'm sure you've been exposed to a variety of quality of pitches. So for those who are listening and are thinking, okay, I have to put a pitch together. And by the way, if you're listening to this conversation at home, pitching, I'm talking with the listeners right now. Pitching is I'm not just talking about early stage founders pitching to Skyfall Ventures, for example. I'm talking about a product team pitching to an executive. You know, it's the same principles. It's about putting a good story together of what you believe in and what you think you want to do. But Cecilia, now back to your experience in this. What constitutes a great pitch in your view?
Just also on the thing you mentioned there, on the last part you said earlier, was you don't only pitch for us. You pitch for your customers. You pitch for your new hires. You pitch for your company as well. So I think that's important. Like being a good storyteller is important, not necessarily just because you want to pitch to us, but also because it's the way you tell the story about your company to all stakeholders around. So it's really, really important on the company building side. It's something we do look for when we invest as well. I think you know, there is many ways to run a pitch, and I think an important part is that you're telling a story, and I think that's always important when, you know, making a presentation in general. I worked as a consultant in my previous life almost, or in my earlier days. I think all that sort of how you tell the story. And of course, you have some building blocks that are typically included. But I think be really cautious about sort of how do you want to tell the story about your company. Use inspiration from others, but think through what's your story to tell, and what convictions do you want to provide to the audience. So that's just in general, just think about your own story. Then I think some typical sort of elements to include is, of course, like what's the problem you're solving, what's your solution, what opportunity are you getting after, etc. And I think here you can find a ton of inspiration online. So I always advise you to check them out. But again, think about your own story as well. And then I think at the end, I'm really impressed with Marit in Strives. It's one of the companies we invested in, and I talked with her after they raised their Series A round, and was just curious about sort of how did their pitch deck look like, what was the story they told, and she had some different elements she pulled forward. But I think the one thing that really stuck with me is like this one page, or the thing she had in mind was like, why Strives will win. What's the reason that we will be a successful company in this market? And what is the clear sort of 5 points that is the reason why you will be the winner in the market? And just the way she talked about this was just fantastic. So I think it's always important, how do you tell your story, and how do you make sure this portray why you will be the one succeeding in a very competitive world in a way. So why you will win, bring that forward. And as a founder in Norway, or as founders in Norway as well, don't shy away from being very honest. You know, American investors, they tend to say that when they speak with European founders, they sort of multiply their ambitions with 10. So I think you're a founder, when you talk about why you will win, be bold and be honest with what you really dream for. We will never challenge founders on their ambitions. That's what we're investing in. So really dare to be bold and say out loud what you're dreaming of.
Yeah, so just to clarify, did you say that European founders tend to be conservative in their.
Yeah, exactly.
Yeah,
So,
yeah, exactly.
be
Yeah,
conservative.
especially. I would say like especially Scandinavian founders, like yeah.
And it's sometimes also, part of the beauty as well. Sometimes I'm just like, it's also sometimes very beautiful when you see these amazing entrepreneurs and you know how much they can achieve and they're still humble. So it's also something that is also very positive in a way, but also make sure that you're still able to say out loud what you're dreaming of.
Yeah, very good. So there is, as part of this pitch, you talked about the incorporating some of these signs of pull, basically. So we have the problem we want to solve. This is why we want to solve this problem. This is how we will win. And I'm assuming we also want to talk about these early signs you talked about before. The early signs of, this shows and proves, this is the evidence that there is a pull for this. What's a really strong sign for you that you look for? Like letters of intent, for example, if it's a B2B SaaS company, very early stage, should founders focus on trying to get those letters of intent, or what are other things that you, like concrete things that you are really impressed by when they talk to you and bring it to you?
Yeah, I think letter of intent is, of course, always really valuable. I think the moment you also get Jon Kåre, who's a partner in Skyfall, he was the founder of Oda, and he always puts it very nicely that everything changes the moment you get a paying customer. So the moment someone is paying for a product, then everything changes in the company, in the culture, and in what you focus on. So I think we can also invest pre-revenue, but I think usually revenue is a very strong sign of people willing to buy your product. So that's something I would sort of, if you can get people committed to buying it, I think that's typically a very strong sign. But I think I'm always also fascinated by people who are a bit creative, like when they have this small edge in terms of how they got in touch with customers. So as an example, like with Nansen, he had thousands of followers on X before founding Nansen, and that was also a very good sort of go-to-market channel when you have that amount of followers before founding a company. So all the sort of creative ways as well to build your traction is also very interesting to hear about. Sometimes I call it like, creative go-to-market strategies and evidence of those working. And we also invested in a company called Pistachio, and they're just really good at sales. Like they have this sales machine. They come from a sales background, and I remember them. I was not part of Skyfall when we invested in the company, but I remember meeting the founder the first time. And then we were having a meeting, or we were planning a meeting the day after, and he says, Cecilie, we can't speak between 9 o'clock and 3 o'clock because then I'm selling. So on the phone selling. So you could talk with me after 3 o'clock. And I think that's just a sign of the focus in the company and how they build it. So to summarize, I think paying customers is always very valuable. And secondly, I personally love like a bit of creativeness in terms of how you can show your what's called a validation as well.
Yeah, I love that too, and I think you're raising a really good point on founder-led sales. Basically, when the founders, or at least one of the founders, is really strong at selling and is focusing on selling, that's incredibly powerful. I was in contact with a startup a few months ago that had a okay value proposition, some fit, but none of the founders were really focused on selling. They were rather actually outsourcing sales, which is, in my opinion, a trap, and no traction expected in my opinion. And when they switched into, okay, let's sell this ourselves, they started to see much better traction because, as a founder, and especially I love when you have, like, for example, if you have 4 founders, and if you have someone that is taking care of the product, for example, as a CPO, let's say, if that person knows how to sell, and is really good at it, that's really, really strong. Because when you're talking with lots of people selling, you're also learning what you know, what's out there, what people need, what people want. You get to ask lots of why questions to really get to the root cause of you know, you get to see how they interact with the product, and those learnings are so precious. And if you have that product hat on, you can then come back to the team, and it's a completely different dynamic. So really love your point on founder-led sales, basically. Really powerful. And I also agree with you on the creative go-to-market ways. I think it's so funny that you mentioned the followers on LinkedIn and so on, because I do see a lot of people, a lot of founders now using their own personal channels that they've created to boost their own startups brand, basically. Very powerful combination, for sure. Cool. All right. So I'm jumping a bit now, but I think it was Mamoon Hamid, who's a partner at Kleiner Perkins, who said that to truly succeed in a VC round, you have to be a great communicator. And we talked about this right now. But what else are you looking for in a story when you meet a founder and you have you know, all of these elements that we talked about? Do you look for something else, or did we cover everything?
I think we covered it well. I think one important part I would say is, you know, we call it pitch deck and we call it pitching, but typically like a first meeting with us is more like a meeting to get to know each other. So I think, you know, some meetings I've had that have been great has primarily been about the founder and their story, given that we do invest in individuals and we do invest in teams. Like we invest in people, we need to get to know people as well. So I think that's something very important as well, is that of course you want to tell the story about your company and every plan you have for the future, but at the end we also need to get to know you guys and the people behind the company. So typically, like, you know, first meetings with us are more like getting to know each other and see if this can be a fit in our mandate. And I tend to say to companies that we have invested in, who are going for their next fundraise, that the main objective for the first meeting is to get the second meeting. It's not to tell everything about your company. So how do you optimize to get a second meeting? And there are much different ways, but I think then again, telling the story about who you are and what drives you and your vision for the company, why you want to spend 10 years on this, is really important. So again, of course, have your pitch deck, be well prepared, know the investor well that you're planning to speak with. But again, make sure you spend enough time on yourself and who you are, and get to know the people. And also, of course, you need to founders need to get to know us as well. Like, we're almost getting married with each other, so it's two-way dialogue. So I love when founders always also ask questions to us, like, why are you eager about this area? What are you looking for? Like, what is your, of course, mandate? I think that sort of two-way dialogue is also important when meeting with people.
That's a very important point. I'm very happy you mentioned that. Okay, so let's, Cecilie, let's say there's a bit of I think a debate on one specific area when it comes to VC, which is how much should you raise? And Ed Sim, the founder and partner at Bold Start Ventures, he argues that too much cash in the beginning will basically kill you. And he argues that if you raise just enough, almost like uncomfortable, enough, that is what pushes you to really stay focused. Back to the point you mentioned before, one of the challenges and so on. Do you agree with that, or what's your take on this?
I think it's a two-way thing. I think raising way too much can be challenging because it can lead you to losing focus and also lead you to hiring many people. And I'm of the opinion that each individual's contribution can diminish as you get more and more people coming in, because there will be more structure, more processes, etc. So I think making sure you don't sort of lose focus, hire too many people, also because if you do that before your product market fit, it will be challenging potentially down the line as you try to find product market fit and you try to get customers on board. If you have a big pool of expenses before getting to that point, it's a challenge. We have those seen, companies that have raised quite a lot of capital and that are cautious about how much they spend and what they spend it on, that are doing well. They have sort of some more time to really mature their product, to figure out their go-to-market strategy. So it can also create, some more space to succeed as well, which can be positive. So it all comes back to sort of making sure you spend it wisely in a way. I think that's the important part. And I do think I think I meet some founders in Norway that I also believe are raising too little, which can sound a bit surprising. But if you're a great team, you have a great vision, you have a good plan for what you want to achieve within the coming 2 years, then I think we might be willing to put in quite a lot of capital to really make that a success. And if you're then raising too little, and meaning that you perhaps can't reach those targets within that time frame, it can also be very challenging. And typically we say you should have at least 1.5-2 years runway after you invest or after you raise capital, because you have some time to get to the next level of the company. You have de-risked enough to raise at a higher valuation next time. So it's all about perhaps not have too much capital, but at the same time, not needing to raise capital too early again next time.
Exactly.
But it's a balancing act, and there's never a recipe for how much to raise at what point in time.
Yeah, absolutely.
So it's a challenge, and I do feel with founders when they have to decide how much they want to go out to the market with, that they're racing and see how the market behaves.
Yes, well said. And since we're talking about funding and especially in Norway, what are some of how's the tech scene and the startup scene nowadays in Norway, Cecilie? What are you seeing in terms of how the scene is right now?
I feel the tech scene has evolved a lot during the last 10 years. It's been a very good development we've seen. I think especially what we're seeing these days is that we see these triple effects, where you have some founders that started companies back in 2015, now doing their second startup afterwards. You're starting to see those, we call it mafias, evolve. We call it the PayPal mafia in the US, when the PayPal, you can see a map of all the people who were part of PayPal from the get-go, and you see now all the startups that has evolved from that initial company. And I think we're starting to see the same trends now with some buckets of individuals that are really starting to do their second, third, fourth generation of companies. See that from people from Spacemaker who were part of Spacemaker from the early beginning, building a company themselves. See the same from Cognite, same from Oda, same from Gelato and others. So I think that effect we're really seeing now, and it's a very positive trend. And I also do see more interest from international investors. They're looking more towards Norway, have more interest towards investing here, which is really positive. And in my opinion, we typically say that talent is evenly distributed across the globe. So there's talent everywhere. That's not only in the US or only in Germany or the UK or anywhere. It's also in Norway. So I think with talent being available everywhere, there's a huge opportunity to build also global companies from Norway. And I think we're starting to see a very positive trend these days. So I'm very optimistic on behalf of the Norwegian Nordic tech team. So awesome. I think we'll just need to keep the positive momentum and not shy away from having global ambitions.
Awesome, good to hear. And any challenges or hinders of progress for the startup scene right now that you're seeing?
Yeah, I can of course always like talk about taxation. I tend to not try to focus on it too much because it's still possible to build great companies here. It's still a lot of attention from international investors to invest in Norwegian startups as well. So I wouldn't focus too much on it. I would focus on building companies. And that's what also Espen in Skyfall also always says, like focus on building a great company. That will be your success, building a great company, getting customers with you, getting great talent on board, really focus on building something great, and other positive things will follow.
Yeah.
So that's of course one, and I think another one which I talked about in other forums earlier is of course janteloven. I think we need to just be able to lift our head and be bold and dare to say our ambitions out loud. So that's something I always encourage people to do.
Yeah, I love that you're saying that. I do that all the time as well.
Yes, I know it's fantastic. I think that's the great part of now your podcast, and you give people a place to share their vision and share their ambitions, which is great.
Awesome, it's part of the goal.
Yeah.
Cool, Cecilie, this was amazing. Thank you so much for joining me. Where can people find you, and where can people find Skyfall Ventures if are interested?
Yes, we're on skyfall.vc online, so we're there. There's also my email, so feel free to send me an email about your company or any questions you have in general, and always available on LinkedIn as well.
Cool. I'll add it on the show notes so that folks can have it. Awesome, Cecilie, thank you so much.
Thank you so much for inviting me. Thank you.
All right, that was it for today. I hope you enjoyed the episode. Make sure you subscribe to my newsletter so you don't miss out, and see you next time.